The landscape of the mineral and metal supply and demand is rapidly changing as European countries introduce energy transition policies to meet climate change commitments. As geopolitical tensions keep rising, Europe's diversification strategy shifts towards replacing trade partners and developing its own mineral and metals potential. Europe's true mineral potential is still not fully understood due to under-exploration, outdated geological surveys, and lack of investment in mining technology. New exploration techniques and strategies can potentially unlock new reserves. Extracting mineral resources in a sustainable way is a major challenge. Mining operations can have significant environmental impacts, including habitat destruction, water pollution, and greenhouse gas emissions. As such, it is vital that these operations are carried out responsibly with robust environmental protections in place. Additionally, developing these resources will require substantial investment in infrastructure, skills, and technology. This includes not only the mining operations, but also the downstream industries needed to process and refine these minerals. Please welcome our presenters, who will provide a fresh perspective on rethinking mining in Europe to meet energy transition and climate change commitments.
A warm welcome and very good morning to you all. My name is Richard Mensah, and I am the Regional Director for Trade and Investment for Central Europe and the Western Balkans. I'm based at the British Embassy in Warsaw, and I'm absolutely delighted to be here and welcome you all to the MINEX Forum. I'm also delighted to be the moderator for the first session. No pressure at all, because a lot will depend on how this session goes for the rest of the sessions. This is a session that we're going to talk about rethinking mining in Europe to meet the metals and material demand. This is really important because the strategic approach to mining has changed considerably in the last 10 years or so. The landscape of mining has changed, and European countries need to rethink our approach to mining to meet the demand for critical minerals as we move forward and diversify to a more sustainable and digital future. Geopolitical tensions have risen quite significantly in the last few years. Thanks to Mr. Putin's illegal war in Ukraine, countries around Europe, from Poland to the United Kingdom to Slovakia and Finland, are all rethinking their energy security and reliance on fossil fuel and helping the diversification work that we are doing. The true potential of mining in Europe is not really fully understood, and we haven't really worked as hard as perhaps we can to fully understand the true potential. As it said in the introductory note there are significant barriers to really understand the true potential of mining in Europe due to underexploration, outdated geological surveys, and critically, lack of investment in the sector. Mining also has an image problem, as elaborated very well by Mr. Barton. Mining is often seen as dirty, old-fashioned, and doesn't really contribute, in the eyes of many, to the clean growth agenda. So it's critically important that we evaluate that assertion about mining. I'm therefore absolutely delighted to have 5 distinguished panelists with me this morning to talk about Europe's strategy to mining and rethinking that approach with clean growth in mind. These distinguished speakers will share their views on how Europe should rethink that approach. You would have seen their biographies online as part of on the events page, so I will not go through the biographies, but I'll encourage you to have a look at their biographies using the QR codes. I'm delighted, therefore, to welcome Jason Holden, who is a senior mining analyst at S&P Global Commodities Insights, Mark Burnett, interim regional director for Europe for the Extractive Industry Transparency Initiative, Ayuna Necheva, head of Europe primary markets, London Stock Exchange. And to my right, Gonzalo Waldman, partner at Synergy Capital. And to my immediate left, Snezhena Militic, forgive me if I got the pronunciation wrong, superb, senior expert for the Geological Survey of Slovenia. Each of our 5 distinguished panelists will present for about 10 minutes, and we will then have 30 to 40 minutes for Q&A, including questions from you, the audience. So without further ado, can I please ask you, Jason, to deliver the first presentation? Thank you.
Thank you very much, Rich Love, for the introduction, and thank you, MINEX, for having me. I'm just going to talk briefly around some of the key supply themes around some key energy transition metals. It's a plug here. Me and my colleague are outside. If you've got any questions on any of our information, just drop by and ask us some questions. Okay, we'll start with the good news. Copper reserves and resources have actually been increasing over the last decade or so. So 550 million tons added R&R since 2012, and if you focused in on Europe, it's around a 43% increase. So globally, that's around 150 years at current rates mining. So what are the issues here? Well, some projections go out to around doubling this rate if we go to 2050. And as you can see, there are certain constraints with operating mines. There's only certain depth you can go, and with that, increasing costs, and of course, greenhouse gas footprints. As we've seen recently in other fields, such as gas, for example, having all your assets in one location can bring on supply country risks. And let's point out that these non-producing assets have been around for a long time. Some of these may never come online, so how useful are they going to be in the future? If you zoom out and look at our supply pipeline, as you can see, forecast fairly well-supplied market up until around 2026. But going forward, by 2032, a deficit could appear up to around 2.2 million tons, and depending on how these possible and probable projects come online, it could be as much as 5 million tons. Now, near term, things are looking much better. We're seeing new projects coming online in South America in particular, QB2, Quellaveco, some expansions at Centinela and Chiquimata, and of course, in the DRC, we're seeing Kamoa ramping up, and closer to home in Serbia, Timok project, certainly ramping up as well. But if you look at the trend in the last sort of decade or so, we're seeing around a 15% drop in both the copper head grades and reserve grades. So if this continues going forward, we're going to be mining more ore for the same amount of copper. So we take a step back to where it all begins with exploration budgets. So things have started to improve. Things are around the level of 2014 after some of the declines around the COVID period. If I would add 2023 data, which was released last Friday, we see another increase up to about $3 billion. Now, this is good, obviously, but most of this mine site related exploration is expanding the life of mines that have been going for many years. It's not necessarily focusing on the grassroots projects, which we need to see to bring on new projects in the future. Juniors are coming back into the copper exploration markets though. So juniors tend to focus on more of the grassroots, bringing on new projects. I will say, actually, with the new data, we've seen a big increase coming in back from the majors, and that's largely being bumped up by Rio Tinto and Vale. So how is this exploration spend translating into discoveries? Fairly significant decline over the last 10 or so years, and this is not to say copper is not being discovered. We discussed earlier, it absolutely is. But most of that is going on to deposits that were discovered 10, 20, maybe 30 years ago. And with demand only set to increase, this is a slight concern here. So this study here, we looked at mines coming online between 2002 to 2023. Now, average time for a mine to come online, 15.7 years. Now, there's slight variations around commodities, but generally for base metals is around that area. So if you're out exploring today, make a discovery, it could be 2040 before the mine comes online. Now, there's some variations around the construction decision, the construction startup, and this is largely around government, social issues, around permitting. We've seen lots of variations around that, and we've seen problems in countries, South America particular, Mirador, for example. And it's rather these issues rather than, say, technical issues around developing an underground mine versus an open pit. Now, I'll briefly touch on CapEx, and this is our forecast CapEx for next year. So as you can see globally, things are looking quite good. Lots of money being spent on copper, obviously, as you'd expect, a lot more being spent on lithium projects. We zoom in on Europe, 55% CapEx is going to gold mines, which, fair enough. Perhaps you'd expect more going on to these critical minerals. So why no more? So why are companies not developing mines? Well, it's never been hard to develop a mine. You've seen it could take 15 years to come online. We're in a highly inflationary environment still. Costs are only going to increase, and your shareholders are still going to want to have a return on your investment. And long lead times are pushing these payback periods back. So something to consider. So lithium, briefly, I won't go into too much detail, but Australia, obviously, the main driver of production. It's forecast to continue, but we are expecting some more to come online in Argentina. Africa has 5 projects potentially to come online in the next 5 years. And touching on Europe, if you can see it there is some production coming online. The Kaliber project in Finland, and I know Sinovac project not too far from here, potentially coming online in the next 4 or 5 years, if all goes well. Lithium exploration fared a bit better actually, doubled in 2022. I can say new data shows that it's actually risen to $800 million this year. And this is largely driven by junior companies, so a lot more focus on the grassroots generative projects, bringing new deposits online. So things are looking up a bit more for lithium. Minutes. I won't go too much detail, but obviously PEV sales, the large driver of demand for most of these lithium battery metals, strongly dominated by China, as you can see, but the EU is making headway there. We expect 2021 figure here to at least triple by 2025. So strong growth still planned. Now, a chart on the right, we'd spend an hour on this chart alone, but we won't. Lithium, discussed supply of lithium, but other key raw materials here, cobalt, obviously, very, very focused within Africa and the DRC in particular. Not much getting away from that, unfortunately. There is a lot more cobalt potentially coming online from some of the ramp-ups of nickel projects in Indonesia. Nickel, of course, very much focused in places like Indonesia and the Philippines, and we're seeing rapid increase as the Chinese invest in these new projects. But just to point out, battery cell manufacturing, definitely focused in China recently, but we are seeing headway in Europe, particularly projects like Northvolt, other such projects around, and because of the IRA in the US, a lot more investment in these projects, securing the supply chain. Now, pretty close to the end of my time, so I'll just briefly bring this chart up. I won't have time to go too much detail, but just have to say, near term, we're seeing good supply of most of these metals. It's coming to the end of this pipeline, our forecast period that we've moved the deficit, and then we're going to see incentivized pricing coming in, increasing prices going forward to bring on new projects into the future. And that just brings me to time, so hand over.
Thank you very much. That was really insightful, Jason. We will get the opportunity for Q&A in time. But thank you very much for sticking to the time as well. May I invite Mark next to present? Thank you.
Good morning, Dean Dolce. I'm delighted to present today on how the extractive industry's Transparency Initiative contributes to energy transition and how European countries use the EITI to inform public debate. The EITI is the global standard for good governance in the oil, gas, and mining sectors. We are an international member-based organization active in 57 countries, and nearly 70 companies are supporting members. We provide a multi-stakeholder platform that gives equal opportunity for government, civil society, and business to engage in open dialogue. We promote good governance through the EITI standard. This framework sets out requirements for countries and companies to disclose information across the value chain, shown in this slide, from the legal framework to production and right across to revenue management. The EITI standard has evolved to respond to stakeholder needs in a changing global context. We updated our standard in June this year with new provisions that respond to the evolving challenges for natural resource governance. The new EITI standard strengthens disclosures across 4 thematic areas: anti-corruption, energy transition, gender, social, and environmental issues, and revenue collection. In terms of the energy transition, there are several challenges facing resource-rich countries. The growth in renewables and uncertain demand for fossil fuels are reshaping the extractive sector. The global shift to a net zero economy requires more data to support good governance of natural resources. For countries with minerals needed for low carbon technologies, increased demand could present a range of risks and challenges. Transparency can help to manage risks for the mining sector to deliver a just energy transition. The 2023 EITI standard supports public debate with new provisions to improve understanding about energy transition policies, improve disclosure of fast-track license awards, provide a clearer picture of reserves and greenhouse gas emissions. European countries were early supporters and founders of the EITI. 7 countries in the region also implement the EITI standard. Let's take a closer look at how they use the EITI to address energy transition issues, including in the mining sector that matter to national stakeholders. Germany uses the EITI for multi-stakeholder dialogue and reporting on national energy transition policies. EITI reporting describes legislation to phase out coal, subsidies for the decommissioning of coal-fired power plants, and the national emissions trading system. Environmental protection and federal support for coal mining regions are also covered. Germany has used the EITI for a study on future natural resource requirements for renewable energy. The study looked at the demand for critical minerals and key technologies required for the energy transition and presented on the table in this slide. Another aspect of this project looked at socioeconomic implications for Germany. The 2023 EITI standard encourages disclosure of proven reserves and greenhouse gas emissions at the project level. These disclosures can inform understanding of the potential economic impacts of the energy transition. British stakeholders involved in the EITI have discussed matters of public interest in the energy transition, including data of greenhouse gas emissions at the project level. Shown here are examples of reporting from the UK Oil and Gas Regulator, which is represented on the UK's EITI's multi-stakeholder group. UK EITI includes representation from the Critical Minerals Association, which contributes expertise on the UK mining sector. The UK Infrastructure Bank recently invested in Cornish Lithium, which is helping to develop the British supply chain. The Netherlands EITI has expanded their online data portal with a new section on energy transition, and this includes information about the Dutch subsidy scheme for sustainable energy production. Shown here is a data set for the trend in subsidies by technology type. The Netherlands also discloses information about CO2 storage and hydrogen, wind power, and geothermal energy sources. Norway implements the EITI standard in the oil and gas sector. The country plans to expand mining with a new strategy for seabed mineral development. The Norwegian Parliament is working on a legal framework to open the Norwegian continental shelf for deep sea mining, exploration, and production. Albania has recognized the value of EITI reporting in open data format. The EITI online portal allows the public to access information on the mining, petroleum, and hydropower sectors. This platform allows users to create data visualizations and apply filters to compare different parameters. Albania is a key European producer of critical minerals, including copper and chromium. The online mining cadastre, published through the EITI, provides the public with information about the geospatial relationship of mines and protected areas. Armenia has used the EITI platform for public debate with a very active program of seminars and discussions about responsible mining and the energy transition. These events often involve EITI partners such as the World Bank, UNDP, USAID, the German Development Agency GIZ, and the EBRD. Ukraine EITI has commissioned a study on mitigating the economic risks of the energy transition. This looked at the impact on state revenues, cost savings for companies and the state, and the impact on energy security. Ukraine EITI also presented a report on strategic raw material partnerships with the EU. I think these examples show that the EITI data can be used to provide insight for policymakers and investors. And one of the great strengths of the EITI is that it provides a space for multi-stakeholder engagement. People are really the most important asset of the EITI. So in closing, let me just pay tribute to my Ukrainian colleagues who were recognized for their leadership in extractives governance at the EITI Global Conference in June. Thanks so much for listening, and I look forward to the panel discussion.
Thank you very much, Mark. That was really, really helpful. I know the EITI plays a critical role in the mining industry. In a previous role, I used to represent the UK at the OECD, and I remember one of the most important aspects of accession to the OECD by new countries is for them to be able to demonstrate how they would adhere to EITI standards. And the examples that you showed in your presentation really illustrates the importance of the standards, which have effectively become global standards. I very much look forward to a panel discussion with you later. Can I invite Eunice from London Stock Exchange to share her own thoughts? Thank you.
Thank you very much, Richlove, and good morning to you all. My name is Ayuna Nichai. I'm head of Europe Primary Markets of the London Stock Exchange, and today I'd like to talk about the financing for mining companies, but also talk about transition, just transition. And we'll have an opportunity to discuss also during the after all the presentations are finished. So just for those of you who are not familiar with the London Stock Exchange Group, we actually operate in over 190 countries around the world, 20,000 people, a market cap around 45 to 50 billion. So we're not just the London Stock Exchange, we actually operate across the whole value chain, including in data analytics. So the most important bit of innovation that has happened recently is the venture into the private markets. So the London Stock Exchange is now also a shareholder with, of a company called Flow, which is a private fundraising platform for smaller early stage companies, also developing an intermediate trading venue for big private companies who want to create secondary liquidity in their stocks, and then obviously the usual, the traditional public markets, IPOs and listings, which are, you know a lot about. Just very quickly, I have a large presentation, but I've been given 10 minutes to do it, so I'm just going to skip over some slides, but just to give you an idea of what's happening. Okay, so what's happening in. Just a second, sorry, I'm just going back. I don't know if it's, okay, sorry. What's happening in the London capital markets. Chris Barton touched on this. It remains that London remains the global centre of financial excellence, number one in Europe for sure. 14.6 billion raised so far this year via IPOs and follow-on offerings. That's more than double than any other European exchange today. And we actually, post-Brexit, it's interesting to see that we welcomed a very large listing from France, Eutelsat Group, in the critical space sector that listed just last week on the London Stock Exchange. And what's happening today is one of the biggest reforms in the generation of capital markets in London. We've created a capital markets industry task force that's changing basically and improving the environment for UK companies, including in the mining sector. So moving on to the mining, what we're talking about today. So the biggest development that we've had recently in terms of sustainable mining and the transition was that we are now asking all of the companies listed on the main market of the London Stock Exchange to disclose against TCFD, the task force for a climate-related financial disclosure. That's really important because, as Chris said before, it's really important for us to take this those mining companies on a journey with us. We have a very substantial mining sector on the London Stock Exchange. It's really important that we continue pushing those companies to be better and do better, and also disclose this information to the public. Again, as Richard said, helping with the changing the perception. Globally, the investment in the mining sector continues, but obviously the focus shift is now to a sustainable mining company, but also those operating in the critical minerals area. In the UK, actually 60% of investment in the UK listed companies actually comes from outside the UK. In terms of opportunities, 85 companies today in London operate in the critical minerals sector. So, for example, lithium, it's huge. There's huge level of underinvestment in lithium. So, which means that there is an opportunity. There is massive demand. So, where the expectation is that demand will increase to 3 million metric tons by 2030, and that's of course that means that. And I think Jason alluded to that, it means that there is a massive opportunity to invest, and we need to actually step up the development in Europe to ensure that this demand is met. Copper is the same. Again, the expectation that the demand will increase to 58 million metric tons by 2035. And again, there is a massive opportunity for you as well to get involved in those projects, but also for investors to invest, both in private and in public markets. Really importantly, companies of all sizes continue listing. So we've had 50 companies list from the mining sector since 2018. You know, companies to highlight Adriatic Metals, Neo Metals PLC, which has actually now got a green economy mark. And I'll probably finish on that. So, green economy mark is the certification that we launched several years ago to award the companies that do good and operate in the green economy sector. Green economy in line with the FTSE Russell metric that exists, and a designation of the London Stock Exchange allows this company to attract additional investors that they wouldn't normally attract. So additional sustainability-focused investors and green investors. And typically it goes to companies operating in the renewable sector or, for example, forestry, etc., etc. But what's interesting is that we've recently awarded this two mining companies with the green economy mark. One of them is Neo Metals PLC, and the other one is Geopolitical Graphite, which are present in Madagascar and Mozambique, and mines for natural flake graphite, which is used in renewable energy sector for lithium-ion batteries and broader EV industry. So that's really important. That's, I think, the shift, again, perception shift is now happening. So, and I'll leave you with the last bit is the voluntary carbon market. Again, it's another new thing, which I think you should be aware of. Is we created the voluntary carbon market, which supports companies and funds that create projects that are additive to the new carbon market. So they create new carbon credits for the world market. Meaning, if you, for example, planted forests, it creates new carbon credits rather than sort of trading in the secondary market. The important bit is that mining companies can also have projects that are additive to the global carbon credit market, which means that they're doing good for the environment. So with this, I'll pause and thank you very much.
Thank you very much, Yuna. That was super insightful. I was particularly intrigued by the voluntary carbon market initiative and also the green market initiative. I know that the capital markets will play a critical role in our ambition to decarbonize and make the industry more sustainable. And not only does listing in the London Stock Exchange help that, but because of the corporate governance arrangements that it upholds really help with that. Because of sustainability and all the other key things through the corporate governance structure really helps with that. So the capital markets and London Stock Exchange in particular has taken a very innovative approach in helping the industry. And again, I very much look forward to the panel discussion later. Can I invite you, Gonzalo, next to talk about your presentation? Over to you.
Good morning, everybody. Tomorrow there will be a session about the next mining unicorns and where to find them in Europe. This is a story of one that has already happened. And it's a story driven by two facts. It's a combination of listed equity support in Canada and the US in this case, but driven primarily by private capital, which is long-term, patient, supporting capital. And you will see that you will need both for these. 2 years ago, the lithium market was in the aftermath of a terrible cycle of oversupply. Back in 2018, supply over the 2 years preceding 2018 and 19, supply doubled and came mostly from Australia. Back then it was a very small market, $1 billion in total. Today lithium is a darling, back then it was a niche market. It was not in everybody's view at all, totally under the radar. And it only took 2 or 3 mines to get the market from supply to oversupply. The result of that was that lithium prices decreased by 70% over the following 2 years, at a level that many of these companies, particularly those in Canada, went bankrupt. I will leave this to the Q&A session, but you'll see that lithium prices have come down 70% from the start of the year. So if there should be some questions about whether today's situation is reminiscent to those in 2020. But the situation, when we were looking at this investment, it was during the middle of COVID. A big portion of the government response during that time to save industries was to foster clean energy, and as a part of clean energy was the transition to EV. So there was a lot of money going to EVs, and that also happened not only in Europe, primarily in Europe, but in China as well. But the question is, obviously during periods of crisis, you have all these policy announcements, and the question is whether after COVID was finished, you would see this demand becoming real. And that was a big problem back in 2018. There were all these very rosy pictures about where lithium was going to go, and it just didn't happen. Then we were investing in Brazil, And Brazil has a very rich mining history, but the reality is Brazil is nowhere in lithium. And even today in the S&P presentation, you don't see it as a separate country, although our view is that it will be one of the primary countries for lithium going forward. And finally, we were backing a team that was untested. It was a couple. One person came from the financial sector industry, an investment banker, and the other person had experience in mining at Anglo American. But they hadn't done anything before. So the question is whether we could trust them and whether this set of particular skills that they had would enable them to become, 2 years after, the Mining Person of the Year. Last week in London, I was with Anna, and produce a company whose share price has increased almost 10 times in the last 2.5 years, even after this drop in lithium prices, as I said, of 70%. So we were back in February of 2021 looking at all of these issues and thinking, should we invest in Sigma or should we hold off? And why we invested? The first thing is that it was clear that it was undervalued. It was undervalued on all metrics. It was fundamentally undervalued on a DCF basis, looking at its peers in the US particularly, and in Canada, it was trading at a fraction of any multiples that you could calculate. And part of the reason we found out, and that's the reason why this share price has increased 10 times after that, is that it was a highly liquid stock. And it was a liquid stock because it was held by shareholders like us. It was held by private equity, by family offices, people who would buy shares and who would not sell them until the right valuation was there. So the float was minimal. And as a result of that, the valuation suffered, but it provided an opening for us. It's an asset with a moat. So when we invested, it was an asset that it met all the criteria. It was permitted, it had the financing, it had all the feasibility studies done, and construction period was going to be one year, except that COVID happened in the middle. And it was in a place where you could increase production, and this company could become a top 5 producer over the period of 5 years, which is quite impressive. I did the calculation back then, and Sigma could produce 20% of the lithium produced in 2022. Obviously, you're talking about a market that grows 20% per year, so that's not relevant. But the fact is that you needed 1 Sigma per year coming into the market without the compounding. And then we thought, okay, there's going to be a period of high prices driven by policy support. But what happened afterwards? What is a lithium product that is going to be marketed when prices inevitably come down? And at that time, we looked and we said it has to be a green product. It's not that it's going to get a premium pricing, but given the option, given who the buyers are, EVs, obviously EVs, they want the whole chain to be green. You want a product that will have these green credentials. And let the other product not be sold. Let the other product go to the industrial sector. But this is the product that will be sold to the EV world. And they have achieved on that. So what they produce right now is called the 000 concentrate. So it's net zero carbon, it's zero tailings, and it's zero chemicals. So being in Brazil, you have 100% renewable energy coming from hydropower. Being in Brazil and the terrible history in Vale, The industry have moved away from tailing dams. And being Brazil, you have biodiesel also available for your truck fleet. And by virtue of the type of mineral that this mine produces, it also it is produced through gravity concentration as opposed to using concentration plants. So it's the perfect product and in the perfect location to go either to China or to Europe or to the US. So it's also from a geopolitical perspective totally independent. The risk I already covered, and optionality as well. This is a company designed by private equity firms that ultimately is looking for an exit. So they kept it with no offtakes. And it's a company that in the next weeks, probably, they're going to finalize their feasibility study to triple production in a year. So the growth here is impressive. And you can see here a LinkedIn post that I did after we lent $100 million for them to finalize construction. And I use the term unicorn. But I want to highlight the second paragraph here. It's not that this is a great asset, but the mindset of the team that brought it together, which is a mindset of partnering with communities and thinking long term, has been critical in its success. And I think the reason that Ana Cabral got the Mining Person of the Year award is because she changed many paradigms in the mining, in how to do mining. Now everybody in lithium is moving to using renewable energy in production, moving away from tailings, etc. But she started this 2 years ago, and she was called crazy or almost stupid from an investment perspective at that time. She gave up her company, Sigma, left probably 30% of the value of its first mine in the ground just by avoiding to move a river. And this is, it's not a river, it's just a little stream of water that has water over 2 or 3 months. But it just provided the social license that was needed to bring this mine to production. This is long-term thinking as opposed to short-term. And that drives me to how should private equity look into mining investments from a sustainability perspective, and I know I have only 2 minutes left. So the Colorado School of Mines defines sustainability on 3 metrics. One is economic viability, the second one is the environmental factor, and then the third one is healthy communities, which stands for social. If you're going to look for a unicorn, obviously the quality of the asset is crucial. And what you have here is basically a Christmas list of everything that should be there. And some of these things are mutually exclusive, but I would say if I had to pick is speed to production. We cannot live in a world in which it takes 16 years from discovery to production if we're going to meet all the demand requirements. But the most important thing is the team. And it has to be a team with fresh thoughts, has to be a team that owns it and has that owner mentality about as opposed to a developer. The idea that you can bring a mine closer to production and sell it is gone mostly. I was checking a paper produced by HSBC last week, and there used to be 100 M&A transactions every quarter on the mining space. So these were junior miners selling to middle-sized mining, selling to large-scale miners. That was in 2011. Right now it's only 20. So this idea that you can bring an asset closer to production and sell it to somewhere else, it's gone. So you have to have the mentality from the start to make these a producing asset. And you have to do well while doing good. I think the two elements are combined. And the third element here is that as much homo economicus people we are, we're human beings, and storytelling has always been a critical element. And the most successful companies are the ones that have been able to build a halo behind them, and Sigma has been a very good case there through their green strategy. And the team is the most important thing, and that's why I end with this quote from Warren Buffett. It's only when the tide goes out that you learn who's been swimming naked. And thank you very much.
Thank you, Gonzalo. I really admire that quote from Warren Buffett. Quite frankly, I don't want to be in the swimming pool or in the ocean with financiers in the mining industry when the tide goes. Really excellent presentation, also illustrating the alternative sources of finance. I mean, given all sorts of issues and risk appetite, I suspect there may well be risk premiums added to the valuations, but I imagine we'll get into some of the details later on in the presentation. Now, for the final presentation, may I now invite Snežana Miletić from the Geological Survey of Slovenia to present to us.
Good morning, everyone. Thank you, Richla, for your introduction. My name is Snežana Miletić. I'm coming from Geological Survey of Slovenia, and I will present you our work on establishing an EU, a European International Center of Excellence on Sustainable Resource Management. This presentation has been done with my colleagues, Meta Dobnikar from Geological Survey of Slovenia and Slavko Vekoslav Šolar from United Nations Economic and Commission for Europe. So actually this picture shortly shows what I will talk about. We have this house here. This is actually one project that I'll say more about. And this EU ICE SRM is EU International Center of Excellence, and it's integral part of this project. Main components of this international center is promotion, capacity building of UNFC, policy support on different level, on resource management, and support of UNRMS and UNFC aligned with Agenda for Sustainable Development. So let's start from the beginning. Our project is named the Geological Service for Europe, and actually this is our objective, to develop such service, geological service. Our consortium is composed of different geological survey organizations, European, and it's meant that we structurally address specific challenges in sustainable management of the subsurface at both levels, EU and national level. This means enabling and accelerating the green transition and building a high-quality database, standardized vocabulary, shared principles, and open framework for everyone. GCEU, this project, is meant that we have this connection from geological data that we have at Geological Service and policy support. So actually we plan to offer interoperable geological data on 3D geological framework, researches and knowledge about energy, minerals, groundwater, climate and built environment. Then our researches about impacts and protection, and decision support information. Our adding value will be to some kind of contribution to research and innovation from science to society. So this next component is International Center of Excellence, where it starts. And the idea and the concept of this such centers starts with United Nations Economic Commission for Europe, and they set the criteria for SRM designation and terms of reference for such centers. And such centers, which are actually, we have a couple of those in globally, should be collaborative network of organizations focused on supporting sustainable management of the resources, and this should be aligned with the Paris Agreement and the Agenda for Sustainable Development. It should be conceived to provide policy support, technical advice and consultation, education, training and dissemination. And at the end, it should promote within its activity footprint the global deployment of the United Nations Framework Classification for Resources and the United Nations Resource Management System to describe the resources needed to attain this agenda that I mentioned before and support their management. And now I will just say a couple of words about UNFCCC and UNRMS if it's not familiar for you. United Nations Framework Classification, or as we call it, UNFCCC, is actually a system, or a SIM, should I say, which classify, manage and report different resources, not just mineral, but also energy and also secondary materials, groundwater and so on. So this is actually specific of this classification for resources. It combines all these, as we say, strategic projects into one classification, that at the end we have some kind of overview how much of those viable projects we have. What are the benefits of UNFCCC? So as I say, it combines these energy sources and mineral resources into one. How does it work? This is 3D system. As you see on the picture, we have E, G, and F axis, and actually these axes have this environment component and social component and this degree of it means what kind of data do we have, quality of data which we have about this project and so on. And at the end, it also shows technical availability of the project. UNRMS is United Nations Resource Management System. It actually has its 12 fundamental principles, as are shown here in blue squares. It's a comprehensive resource management system for sustainable development that supports stakeholders in various goals, including adding the cooperation of circular economy wherever possible. UNRMS stakeholders are government, industry, investment sector, and NGOs at the end. And now we talk about ICE. We could talk about our Center of Excellence. Why? European Union is committed to social development goals. And to achieve those goals, the European Union set two initiatives. One is digital transition, and the other one is the European Green Deal. And to achieve these goals, the European Commission has prepared two acts. One is Critical Raw Material Act, and this is still proposal, and the other is the Net Zero Industry Act. So this is actually now our work in the project to establish the International Center of Excellence. First, we started with this questionnaire. Why? This questionnaire actually showed us the level of expertise on UNFCCC in our consortium. As I said earlier, our consortium is built of different geological service, a European geological service, and we set the question, are UNFCCC and sustainable resource policy planning and management in your country region's legislation? And we actually get a majority of partners replied no. So they don't have UNFCCC and sustainable resource in their legislation. And just a few European countries have regulated by law. Second question was, which reported standard applies to your national mineral system estimation and classification system? Or you have your own. And European countries have very different reporting standards, and as we know that they are very specific from scope compliant to national. Very few countries actually use UNFCCC. And the third question was, did your organization experts organize UNFCCC trainings? That means trainings where we have this capacity building and where people learn about UNFCCC classification and how to classify their own project from national classification to UNFCCC. And small number of experts actually in our consortium is identified. So actually there is not a lot of people who deal with UNFCCC and who actually are experts. Just very few experts held UNFCCC trainings, and some more participated at trainings on different levels. And this actually gave us this picture where we are, what is needed, and we identified that reporting in UNFCCC needed, will be needed if critical raw material, when it will, CRMA Act will be confirmed, and if we will have to report in UNFCCC, then we have to build capacity on it. And people have to learn about UNFS and how to classify the projects. We have to promote UNFCCC, and at the end we have to build IT infrastructure that stakeholders have this platform to look at, to contact other experts and to view for information they need. And according to what is needed, we have almost similar picture of our first planned activities in our Center of Excellence. And as I said, we need capacity building, and yes, we said, okay, then we will make a plan of trainings, we will say how this trainings should look like, and we will have trainings on national levels. We identified experts, and we also identified users of these trainings. We will make promotion of UNFCCC and UNRMS. This will be on different levels. We built registers, of course. We have a different list of experts, partners, and stakeholders, and these are actually our networks. And at the end, we are building this platform. This is actually one infrastructure, one-stop shop, and it will support this knowledge hub. And thank you for your attention.
Thank you very much, Najena. That was really, really interesting. I think one of the things that I said right at the onset is the importance of geological surveys in really helping us understand the potential of the industry. Because of our data surveys, I think the potential of Europe in terms of our mining potential is not very well understood. And I think having a UN-backed framework can help us do that very effectively. Great. I think we have about 20-25 minutes for Q&A, and I want to have a very lively discussion involving the audience as well. So what I will do is I'm going to abuse my position as the moderator by asking each of the panelists a question each. Then I'll open the floor for all of you, the audience, to direct your questions to the audience. So without further ado, I will start with the first question. I think I'm going to direct it to you, Gonzalo. You highlighted in your really helpful presentation, which I found fascinating, that the price of lithium has dropped by about 70% from its peak in 2022. Is the boom over? And if it is, what does this mean for EV production and electric vehicle industry in general?
I think it's not, no, the boom is not over in terms of production increase. You are in front of mandates that basically in 10 years from now there will be no ICE, so internal combustion car engines in the market anymore, or being sold anymore. So the demand is there. What you have now, as opposed to a few years ago, is very savvy, very tech-driven consumers that if you don't deliver on your promise to increase production, they're going to basically substitute you with something else. So what happened in the last year was three things essentially. One is that the converters got very good at treating lower quality ores. So what used to be a chemical play in which lithium quality mattered a lot is increasingly becoming commoditized. I'm not saying it's there, but it is on its way. So lithium, you could make a point that it's going to become like iron ore or copper at some point. The second one is alternative sources in China and in Africa of ore that was sold without any processing. So in China it's called the pyrrolite, which is a very low grade, very brown as opposed to green type of mining, but when prices were $100,000 a ton of hydroxide, it made sense to produce. And then the third one was the threat of lithium-ion batteries being substituted for sodium. So the mining sector as a whole has to switch its mentality and realize that it cannot exercise a lot of pricing power, because otherwise the industry will just move on. These are tech people, and they will look for solutions beyond you. At these prices, and going back to the question, most of the cost curve is profitable, so it should not defer any investment decisions to new production. The expectation is that prices will come down a little bit more, basically because of the economic crisis in China, but the story for lithium is positive in the long run.
Fantastic. Superb. So that means we have to look beyond the short term and look forward to the long term, because the long term industry, the long term future of the industry is more positive. Jason, can I come to you next? You did the first presentation and you touched on low discoveries for copper in recent years. What do you think initiatives on sustainability like the Copper Mark initiative, how do you think that could impact the industry in terms of discovery and helping bring more copper to production?
Well, I guess Copper Mark's mostly focused on operating mines, so we've seen an anecdote from last week, and LME week was I think about 66 operations are now Copper Mark, and this is mostly mines that were already reaching those standards before, so rather than encouraging new mines. So I think in the future we're going to see more peer pressure, so if your competitors are already operating at that level, at that industry level, it's going to push you to also reach that level as well, and also further downstream, like if your lenders are demanding it, your investors are demanding it, that's sort of more likely to push it as well, rather than say purchasers. In terms of exploration, I'm not sure if it's gone that far downstream yet. I think it's more of an operating thing, but we'll see it moving up the chain as well to refineries and smelters, and also taking account of the Copper Mark, but also other ESG systems. I mean, there's various ones about right now. There's no set standard, but yeah, I think it's certainly something we're going to see more of in the next 5-10 years.
Fantastic. So ESG in the sector is here to stay, and I think it will play a critical role in making the industry more sustainable going forward. Ayuna, can I come to you next? You talked about some really important initiatives, including the Green Economy Mark and the voluntary carbon market as well. But what I want to hear a bit more from you is transition financing for European mining companies. What is available and what does LSEG do to help with transition finance?
Thanks, Richard. So there are a variety of tools and solutions that are available to mining companies. One is very well known, which is a green bond, where you can raise debt to support your green initiatives, projects, and so on. So that's really important. And it's, by the way, it's not just at the company level. For example, we had the government of Uzbekistan, which listed a green bond. They raised around 200 million USD equivalent to invest in the sustainability project in the country. But the most important instrument, I think, is the transition bond. So this is the capital that is raised specifically to support a company from an extractive industry such as mining or oil and gas to support this transition to a more sustainable, greener model. And that may involve anything from risk management and tailings management to corporate governance restructuring to promoting diversity and things like that. So that's really important. And also, we just want to touch on the breadth of and the range of companies that can use this finance. It's not just the big, multi-billion-dollar corporations. It's actually junior miners and early stage companies can also access that instrument.
Thank you very much. That was really helpful, and you can always count on the London Stock Exchange to come up with very innovative solutions for any industry, not just the mining industry. Smirjana, can I come to you next? You talked a bit about the European International Centre for Excellence on Sustainable Resource Management. That's a handful. EUISRM. What do they actually do, and what does SRM help to coordinate and collaborate with partners to help the industry?
Thank you for your question, Rachel. Well, if you're asking me about other centers of excellence, yeah, we have few globally. We do cooperate with EU, with the International Center of Excellence in Latin America, in Mexico. We do have plans to cooperate with others, and what do? They are all actually centers, knowledge hubs for promotion of UNFC and capacity building and promotion of UNRMS. So promotion of this sustainable resource management system. That's for now, but in future we do plan to cooperate with all.
Fantastic. As with many industries, global cooperation is critical, and more so for the mining industry. So thank you very much for that. Last of my questions will be directed to you, Mark, on EITI. You talked a bit about your model for multi-stakeholder engagement. What are some of the examples of the benefits of this approach for the extractive sector, extractive industry?
Yeah, thank you, Rich Love. I think in my presentation I tried to highlight that the EITI is unique with its model for multi-stakeholder engagement. So it's really about representatives from government, industry, and civil society coming around the table together. And I think over the 20 years of EITI, one of the success stories has been the ability to, for this model to really yield some interesting insight from extractives data. So the EITI standard has quite a focus on data quality and comprehensiveness. And I think when the multi-stakeholder group comes around the table with equal footing and they're able to analyze, interrogate the data, and publish an EITI report. One of the benefits of that approach is that it results in a trusted document. So having this kind of multi-stakeholder engagement results in a product that is very well trusted. And I think it also builds confidence when it comes to public debate. So that is an important ingredient for policy making, really.
I couldn't agree more. I think the public discourse for the extractive industry is really, really important. Great. Now I'm going to open the floor for you, our distinguished audience, to ask questions. Can I please, if you do want to ask questions, come forward to one of the microphones in front and do say your name, which organization you represent, and if you could let us know which of our distinguished panelists you're directing your question to, or indeed if it's to everyone, and I'll try and make sure that I get everyone to answer as well as possible. Thank you very much.
Hello everybody, thank you for the insightful presentations. I've just been in London to a Canadian mining symposium, and a young gentleman came up to me and he asked me a question. He said, we talk about, all these standards and we talk about all these regulations, but I think what really will drive the green transition in mining is the difference in the price of metal, whether it is certified green versus the rest of it, kind of like organic food versus the just food. Do you see that happening anytime soon? And that's a question to anybody who cares to share thoughts with us. Thank you.
Fantastic, thank you. And sorry, can you say your name and which organization?
Yeah, sorry. Tanya Matvieva, WSP Mining UK. Thank you.
Fantastic. Well, a very important question on price differentiation, whether that will help the industry to help with the sustainability and the transition process. Who is brave enough to take this on? Okay, Jason.
I briefly touched on Coppermark, and that's one of those ESG ratings. At the moment, I'm not sure how much purchasers are going to want to pay a premium for the top quality ESG rankings. It may be more of a thing where we get a discount for the lower grades. So, and this is something I said, it's going to have to be pushed on by peers. So if Rio Tinto is doing it, for example, Mali's going to have to be pushed into it. But of course, there's always a market for the less good stuff, the lower ESG rated stuff, and that has in the past been China. I know they're certainly changing the way they go about things there as well. I think it's a wait and see thing here. It's not picked up steam yet. I don't think it's something that's been implemented across the board, so it's a wait and see how the market evolves over the next sort of 5 or 10 years. But I think it's definitely something coming. If it's a premium for high quality stuff, I think it's more likely to be, a cut to prices for low quality.
Great. Anyone else share a different view from Jason?
No, as I mentioned in my presentation, we invested on the basis that in a down market, the green product is the one that is going to get sold, and the other one is going to have to go to different markets that don't attract such good pricing. So I'm completely in agreement with S&P. Rather than making a parallel to the food industry, I would look at, for instance, the petrochemical industry, and there you see products commanding a premium on the recycled front. So there may be premium commanded on recycled metal, but it has to be very specific in terms of end use. I don't think that green mark lithium or copper is going to command a premium over a different product.
Great, thank you very much. Audience, next question. Yes.
Hi, good morning. My name is Michael Suchu from Germany. Talpa Solutions, we're a company supporting mines in providing digital services to the mining equipment. Question from my side is, we're talking about sustainability and transition in Europe. And we saw on the slides it takes like 15 years to get from the deposit exploration to the mine. And I heard often the name of junior junior mining companies. So in terms of Euro, I know that expression from overseas, but I'm not really aware of what's happening here in Europe. So how do we support, or what is the market of junior miners in this European context from your view? Maybe it's for SAP and maybe also on the stock exchange. So how can we attract juniors, and who are these juniors who are coming to invest in Germany with this long view and getting that? Thanks.
Thank you very much. I know that this is something LSE does and does very well. So over to you.
Thank you for the excellent question. And yeah, 15 years, it is an average, so some companies come to fruition sooner. And just a couple of days ago, I had a phone call with, actually no, it was yesterday. I had a phone call with a company that is a greenfield mining project. They need money to invest, to actually develop, as an exploration, and to develop the mine. And then, where do you get this money? And actually, public markets do support that. So for junior, I mean early stage, so from greenfield exploration stage, and it's a smaller size. So for example, valuation could be anywhere from, I don't know, 10, 20 million up to 50, 70 million euro. And these companies can come to a market called AIM in London. And by the way, it could be European or non-European company, it doesn't really matter. What matters are the investors. Are the investors going to support that IPO? And the experience and the case studies show that they will. So we've had examples of companies who have come to the market pre-revenue, did an IPO, because there was a confidence in their story. They actually repeatedly raised capital, 5, 10 million, a couple times a year, for X number of years. And then when it becomes successful, then it's a big payout for all the investors, and that's really fantastic. So I think we will continue seeing those stories, and we actually encourage more of those companies to come to the market, because as we talked about, we need to support that investment in Europe. The majority of investment is now is happening in the Americas and in Africa, and it's really important to support European companies.
Superb, thank you very much. And I think this goes back to what Gonzalo said in his presentation about storytelling. If you're able to tell a compelling story, you will get investors to back your product or your initiative or service. Of course, all the due diligence and everything else needs to be done, but I think a compelling storytelling is very, very important.
100% report.
Indeed,
yes.
And ensuring that the corporate strategy and everything is in place also matters a great deal. I think we have time for 2 more questions. So, audience. Yes.
Hi, Julian De Rosio from Edelweiss and Ecometal Resources. Question for you guys, very practical examples. It's all great, all theory behind it, that it gets financed in London, that everything's beautiful, transition metals. Guys on the ground like us, this is not what we see at all. We don't see money. The London capital market is absolutely dry. We're trying to finance project in Spain. We go to BNP Paribas and they tell us we cannot invest in mining because it's brown and no one wants it. So one of the examples that I really liked, and we still need to bring positive to that, so Waldo, to you, Sigma project was great. You had a minimum capex, maximum IRR. You had a team that was able to transition from being a junior exploration company into building 100 million capex, which is extremely small in the market for an NPV into billions. I mean, this is the dream. Outside of the dream, the reality is that quite often junior exploration companies are struggling, investing a lot of time into raising money and not having time to build a team that is ready to actually build a mine. They're facing capex that are too high. So when your comment earlier that we need to increase ownership all the way through production, This requires a lot of manpower. We're facing financial problems on one side of raising money, environmental issues on the center when we try to do something, and then on the right, it seems like private equity wants us to also build the mine, which is a complete different set of core competences. Could the junior companies actually be lost into all of that in the ground between the messages we hear and what's happening and what we feel is happening on the ground?
Maybe I'll just make a very brief comment. Let's just talk, and we'll talk more. So we won't do it as part of the discussion, but we can help.
Fantastic. And just so you know as well, I think there's a critical role for governments to play to improve the image of the industry. As you say, you go to banks and financial institutions to ask for financing, and you will tender right away because it's considered brown and not green. This is a critical part that the UK government is currently playing with our critical mineral strategy, and of course we have our export credit agency, UK Export Finance, which has significant funds available to support UK industry in the mining sector, because we see it as very critical to the clean growth agenda. And I think His Majesty's Trade Commissioner Chris Barton made that very clear in his presentation. But I think it's incumbent on most governments to make sure that the importance of the industry and the role it plays in sustainability and the green agenda is widely talked about and shared amongst the public. Panelists, any thoughts on this important question? In addition to, I know I will speak to gentlemen. Any reflections?
I'm basically going to agree with what you said. From a private equity perspective, we will want you to build a mine. And that's because of the type of capital that is here. And what's happening is that you have a branching out of different type of investors, and public investors will support development and eventually flipping the asset back to bigger investors for the big payoff. But if you look into the other sources of capital, which is private equity, which is traders, off-takers, royalty companies, etc., all of them want cash flow, essentially. So there's a decision to be made in terms of how you're going to develop your project. Is it something that you can bring it to fruition? And that has to be a decision made from the start, I guess. Or is it something that you can bring up to a certain point and then pass the baton forward to larger companies? And based on that, you can decide how to fund it.
Thank you.
Great. Thank you very much. I think that brings us to an end to the first panel discussion. Right on time, I don't want to cut into your coffee break. I want to say a huge thank you to our esteemed panelists for presenting some really thought-provoking and interesting slides on all sorts of issues, really broad, ranging from capital markets to sustainability, alternative financing, and a whole host of other things as well. So thank you very much for your active participation as well, and I wish you a very successful rest of the conference. So thank you.